Okay, be a good boy. Hello. Do you have kids? Do you want to take the child tax credit or the doggy daycare credit? I have three fur babies and only real human, so I wish we had a tax credit for fur babies. But we don't. We just have one for human babies, and we're going to learn a lot of the rules about them and what the difference is between these two things behind me. So we have a child tax credit and a child care credit. Those sound an awful lot alike. So just be really careful when you're reading about them or if you have an exam question on them to make sure you know which one it's talking about. Okay, I'm going to start with the child care credit first. Both of these actually have the word dependent in them as well. So you've learned your dependency rules, and those would apply here if you're a dependent and maybe not a qualifying child. Okay, so the child or independent care credit, you want to focus on this word care. It means you have to put that child into care so that you can work or go to school, and you need to know those rules. But let's talk about the amounts. So say I spend $10,000 on doggy daycare for Murphy, who you saw in the video. Yes, that's my Murphy. What kind of credit could I get for this? Well, the tax code right now says that first of all, we look at actual expenses. And for one child, we can take up to 3,000 in expenses. And then there's another 3,000 for another child or as many more as you have. If you have 10 kids, you're stuck with a maximum of $10,000 in expenses, okay? Then the credit is based off of these expenses. So the credit, I can't give you one single amount because it's a sliding scale of anywhere between 20 and 35%. And this is based on your income. So there is no total phase out of the child care credit. There is a total phase out of the regular child tax credit. So if you make $1 million a year and you spent $10,000 on daycare for only one child, then the maximum amount of expenses that would qualify would be 3,000, and you would get 20% of that 3,000 or a $600 credit. So make sure you also remember the difference between a credit and a deduction. A credit is usually better because it's a dollar for dollar reduction. Once you figure out your taxes, it just starts wiping away those taxes dollar for dollar. Whereas a deduction just reduces the amount of income you get taxed on. So the most a deduction can ever save you is 37% of what you spent. And that's if you're in the very highest tax bracket. If you're only in the 10% tax bracket, it'd save you 10% of what you spent. So credits are better. So 20 to 35%, again, depending on your income, on either 3,000 for one child or 6,000 for two or more children. And again, it doesn't go on beyond that 6,000. Okay, next, let me flip over. Oops, before I erase that, I forgot to talk about ages. So for the child care credit, the child or dependent needs to be under age 13. And then as always, we've got the disabled exceptions there. But I remember this, like sometimes students will get it confused. People usually remember the child tax credit is under 17. But I remember this is different because think, if you've got a 16-year-old kid, you're not sending that kid to daycare. Hopefully, right? So under 13 for your child care credit. Okay, I'm looking for my eraser. So now we will go over the child independent tax credit. So this is just congratulations, you have a kid. Kids are really expensive, so are dogs, but they won't give me a credit for that. So congratulations, you have a kid, you get a credit. So what are our credits here? Well, I just mentioned it's for under 17, and you're looking at your QC and QR rules that we've learned about, a qualifying child and qualifying relative. And although remember these rules apply to lots of different things. And so the basic rule for a QC says you need to be under 19 or under 24 in full-time school or, like a disabled person and no age. But the child tax credit is a little more restrictive. Not only do you have to be a QC, but you have to be under age 17, or your QC has to be under age 17 to be able to take it. So don't get that confused with the under 19 overall rules for a QC. Okay, if the QC is under 17, then the taxpayer gets a $2,000 credit. And if the QC is not under 17 or it's a qualifying relative, that's where this dependent care credit comes in, and that's a $500 credit. So 2,500. So remember how the child care credit was limited to a max of 6,000 expenses, 3,000 for each child. So what if you have more than one kid? You're out. Well, this is not limited. So you can have multiple children. You can have 5 kids, bless you, and it would be $2,000 for each child. If they were a qualifying child, you'd have $10,000. So also kind of think back, what did I say about the phase out for the child care credit? It does start phasing out as your income goes up, but there's no total phase out. You can always get 20% of 3,000. So you can always get at least a $600 credit, unless Congress changes the rules, right? But as of right now, that's what you can do. What about this one? Well, this one, there is a phase out. So the taxpayer would start to lose $50 of this credit for every $1,000 their AGI goes over certain limitations. So right now, those limitations are 400,000 if you're married filing joint, and 200,000 if you're not married filing joint. So typically a single person or head of household, something like that. Okay, so how does this work? Suppose I am single and I make $150,000 a year, and I have 2 kids. One is under 17 and one is 18 years old. They both meet the QC rules, but one's under 17 and one is 18 years old, or even 17. I would get a $2,500 tax credit because I'm not going over the threshold, being a high income taxpayer, and I would get 2,000 for the kiddo that's under 17. That's backwards. Nope, it's not backwards. It's really hard to watch in the mirror and then do that on the board. Sorry, under 17. Okay, now let's change it up. Now let's say I'm still single, but my AGI is $410,000. I am going to lose $50 for every 1,000 I go over. Oh, I'd have to be married filing jointly now, wouldn't I? Let's make me married filing jointly because I did the $400,000 limit. I'm gonna lose $50 for every 1,000 I go over. How many thousands did I go over? 10,000 divided by 1,000 is 10. I think of it in $1,000 blocks. I went over it 10 times. So 10 times over times $50, I lose $500 of my credit. Okay, stop. I want you to pause the video and think about something, and this will help you remember it. Use my same scenario. I was going to get a $2,500 credit because I had 2 kids under 17 and 17. Tell me how much I'm going to get now if my AGI is 410. I already told you you're going to lose $500. So the question that I hope popped into your mind is, wait a minute, do we lose $500 on each child, or just lose the $500 one time? We just lose the $500 one time. So whether I had 2, 1, or 20 kids, I would just lose $500. So in this scenario, I had a $2,500 credit. I would reduce it by my $500 because I went over the 400,000 AGI, and I'd get 2,000. Okay, so the last thing I want you to read about is, since we're on credits, refundable versus non-refundable credits. Remember that non-refundable credit says, look, if you don't owe any taxes, we're not going to reduce, there's no tax liability to reduce, so you don't get this money back. But refundable credits say, even if you don't owe the government money, they're going to give you some money back based on a credit. The earned income credit is a big refundable credit like that. Well, the child tax credit is what we call partially refundable. So the whole thing is not, and these amounts can change and fluctuate, so I won't go over amounts here. But it is one that even if you don't owe any taxes, you might get some money back from the government saying, congratulations, you have a child and they're expensive. And so those are some of those social and economic reasons we raise taxes also, right? The government's not just raising taxes strictly to fund the operations of the government, the military, highways, things like that. Sometimes there are social and economic reasons, and certain people pay in taxes so that the government can redistribute that wealth to other people, like in a situation like this or the earned income credit. Okay, that's it for your child and your child care tax credits.